Hello, everyone, and welcome to a special episode of the AI Investor Podcast. We have a guest on today, our first repeat guest in podcast history, which we have the honor of welcoming Simon Erickson to the podcast. So, Simon, it is good to have you on board today. We're going to talk about some exciting stuff.
I am thankful to be here. I'd like to thank the Academy. Thank you for having me as the first repeat guest on the show, Eric. You and I have known each other for about 15 years now, and we both like to nerd out on innovation. So it's really a pleasure to talk about some exciting stuff with you this morning.
Yes, this is a podcast for the nerdiest of topics in technology, and it doesn't get any more nerdy than me and Simon. So it should be a good time today. We're going to talk about something new. This is an AI podcast, but as I've talked about in the past, great investing doesn't know any bounds of trends. Across the growth sphere, you're going to find a lot of good companies and a lot of spaces. So Simon's going to talk about the space industry, which is something new that we've never discussed on this show. But we're also going to talk about the typical nerdy topics like Simon's outlook on chips and also a new AI stock idea that you think has kind of some inroads into this next phase of agentic AI that I'm very intrigued to hear about. But we are going to save that for the end. So, Simon, let's get started talking about space. You know, space, it's as I noted, an area that we haven't talked about on this show. And you had the good fortune and track record of recommending Rocket Lab, a very notable stock in the space, before it saw some very significant gains. So could you just talk about a little bit of the background? What led you to investing in space, and what is attractive about this industry as a whole?
Yeah, and Eric, it all comes from, looking for 10x opportunities out there, right? Looking for stocks that can be an order of magnitude higher than where they are today. And you have to go looking in the spaces, pun intended on this topic, where people haven't really had an opportunity to invest before, right? And you and I, we went in the self-driving car with Waymo, if you remember that. We talked with NVIDIA when they were first talking about this new technology called deep learning. And then we talked about cryptocurrencies for a little while, and then here we are talking about the space economy. And the reason this is so interesting is because you couldn't invest in space. There was no one that was a publicly traded company that even was an option for this before. And then secondly, if you even wanted to get to space, you basically had to be a government-funded organization that had a budget of more than $100 million, or you had to ride share with SpaceX, basically getting on the bus when it was going to stop at the stop you needed it to stop for. And now Rocket Lab has just really been the democratizer of the space economy. When they came public in 2021, all of a sudden anybody with $7 million and a website connection could go directly onto their website and book a dedicated launch using their Electron rocket to any orbital plane you wanted to. That's a 10x improvement, certainly from what you used to have as an option. And you started to see some of those early companies signing on. The interesting thing about it now, and the reason that Rocket Lab stock is a 10-bagger over the last 18 months, as you might expect I'm going to say here, is the deals get larger, the contracts and the payloads get heavier, and then all of a sudden Rocket Lab has built upon this small foundation and is kind of the best-in-class independent launch provider that's an option out there.
And longtime listeners might remember Simon from his first appearance. You broke down a discounted cash flow model you had for Tesla, specifically that you believe that the company could reach $700. As I noted earlier, you have on your track record that recommendation in Rocket Lab that's done very well. Recently, you released a DCF, or discount cash flow, laying out all the assumptions for Rocket Lab and getting towards an ultimate valuation. So could you just talk about, why you went through the process of creating this DCF? Because I know it led to a lot of nights where your wife was asking, when are you going to finish this model so you can get back to your family? This is very time-consuming stuff. What led you to do that?
Yeah, they are. Thanks for this question, because it's very rare. For the most part, a DCF, a discounted cash flow, is standard if you're working on Wall Street. Like, you're doing this for every company that you're issuing a sell-side report for. It's kind of, you have to do a DCF for a company that you have a coverage for. But retail individual investors, we don't typically do DCFs. Certainly if you're looking at stock coverage that's available maybe on social media or on YouTube or things like that, for the most part, we get comfortable with kind of, a PE ratio we want to pay, or maybe a price to cash flow ratio. We kind of look at multiples out there, but we don't want to do the legwork that takes a week or 2 weeks to really build out a full discounted cash flow valuation. And of course, we know it's BS in, BS out. There's no reason to do a DCF if you're not going to do it right and really be diligent. But I've noticed, Eric, that there is a void in the market of coverage for us of individual investors. We go out and we find innovative companies, we find new things that we get excited about out there, but there's certainly a void between that and then the nitty gritty getting in the trenches of the financial models. And I think one thing that I do enjoy is going out there and finding the innovation, finding the companies like NVIDIA or Tesla or Rocket Lab in this case, but then also being bold enough to make some assumptions, knowing these companies have a lot of risks and a lot of uncertainties because they're so early in their life cycle, but really putting a best, most likely scenario of how the future is going to look for them, and then quantifying that for individual investors. And so that's exactly what I did with Tesla. You and I chatted about them last time. We're going to talk here about Rocket Lab. I never have a preconceived price target when I go into these exercises. I always let the numbers and all of the data do the talking for me.
Yeah, and so let's talk a little bit more about this Rocket Lab DCF. What I really like about this as well, when we went through your Tesla model, it really forces you to think through every aspect of total addressable markets, how attractive different projects and initiatives the company is working on are. It really allows a full breakdown of the company. So a lot of our listeners today, maybe space is something vaguely interesting. What a breakdown of this DCF will allow you to see is exactly what the opportunities are in very specific detail. So if you've never worked or looked at Rocket Labs, I don't think this means that you won't get value from this, because through the introduction of Rocket Labs, you're going to understand the economics of the space industry really well. So let's get to it, Simon. Let's talk about, where would you like to start with the DCF? Do you want to start with the price and work your way through, or what starting place would you like to start with?
Yeah, we can get into to the details of, maybe just to start at the 10,000 foot level, or the geosynchronous orbit level in this case. Is there's roughly 15,000 satellites that are active, that are in orbit right now across the planet, which is a lot, but it's also been doubling pretty much every 18 months. It's almost kind of like a Moore's law trajectory that we've seen of more and more people and more companies and more governments launching satellites into space. And as we said earlier, there's only been a limited number of providers that have even gotten those up there. The FCC right now, who reviews the spectrum and all of the regulatory needs before you can launch a satellite into space, has got a backlog of 40,000 more satellites to go.
Wow.
Where companies are ready to start manufacturing, they're ready to launch as soon as they get the clearance for them. A lot of that is SpaceX, a lot of that is Amazon, Project Kuiper, things like this. But then you've also got a lot of other independent companies too. But 40,000 is more than 3 times what the total number of active satellites are that are out there right now. We'd be jumping from maybe 15,000 to 45,000, 55,000. And I think that Rocket Lab doesn't have to have 100% market share to be a fantastic investment going forward. If it even launches 10 or 20,000 satellites in the next decade or 15 years, that is enough to be another 10-bagger even from where we are today. But we have to be careful and we have to be diligent too, Eric. We can't just, say, hey, big total addressable market. Space is $1 trillion forecast of what Morgan Stanley thinks the space economy is worth by 2040. We're going to call it a day. We're just going to invest in this company and get out. The hype cycle is our friend, but it is also our enemy, because valuation always matters if you're investing. And if you get in at too spicy of a valuation without the fundamentals to back it up, it can actually be detrimental to your investment returns going forward. So that's kind of the reasoning for Rocket Lab. Undercovered DCF coverage for this in the first place. Really exciting market to grow into. But then also, let's take a look at the the numbers and see if it actually makes sense from an investment perspective.
Yeah, and what number did you arrive at for Rocket Lab?
So this is going to be an interesting one, because last March, in March of 2024, I was the raging bull of Rocket Lab. The stock was trading for $4 a share, and those who might remember, I was pounding the table pretty hard and saying it was worth $22 a share, 5x, and got some interesting looks, certainly some interesting comments on it back then. People were saying there's no way it's worth that much. And here we are today, and the stock is worth, nearly $50 a share. It's 10x over 18 months, which turned out to be the right call. I say it's interesting because I have got some confused fans who liked seeing this on the way up, who are now saying, Simon, why is your most recent price target for Rocket Lab only $27 per share. Should I sell all of my stock? Should I get out? Is it too overpriced out there right now? There's a lot of moving pieces on this. I think the overall takeaway, to start with the punchline, is that Rocket Lab is a fantastic company that's going to grow for the next decade or more. I do think the shares have gotten a little bit ahead of themselves, at least based upon the fundamental valuation. Doesn't mean go out there and sell your shares. I'm just not buying aggressively until it gets back to about $27 again.
Yeah, and there's a lot of growth stocks. Then some periods you would have thought ran ahead of themselves, but if you're a long-term investor, like you said, it's not a decision to necessarily sell. It's just often you're not going to be adding to the position. So let's talk about some of the assumptions that are going into this to give everyone an overview of how attractive space is as an investment space. When you built your DCF, what are you looking at in terms of their growth and launches, what their total revenue is for the years to come? Can you just walk us through kind of the main inputs that you used in this model?
Yeah, the inputs, Rocket Lab has got kind of two income streams right now. One is launch, and then one is space systems. Launch is the number of launches that it can do per year. And traditionally, up to this point in its history, it's only had one option available. You could carry up to 300 kilograms of payload using its Electron rocket, right? Its smaller lift rocket. And the real exciting thing right now is that it's developing a bigger rocket. We're going from Electron to Neutron. Anyone who likes physics can appreciate the scientific jargon used in the naming of its rockets. But it's a bigger rocket that can now carry 10,000 kilograms of payload as opposed to 300 kilograms, 30x increase. And what does that mean? That doesn't mean you're just launching, maybe 2 satellites for an academic purpose, for maybe, some small imaging or some video things like. You can now launch an entire satellite constellation. And so the companies that might be interested in doing that, providing broad geographic coverage, maybe you're doing it because you want to have broadband internet that is satellite based because you're a telecom company. Maybe you're a logistics company and you want to have video feeds of exactly what the weather patterns are across the entire world for the time. Maybe you're a defense department. You want to see exactly what's going on with other countries at any given time. There are now much, much larger deals, and Neutron's average revenue per launch is about $55 million, we think, that is coming up for its inaugural launch here in the end of 2025. Compare that to $7 or $8 million per Electron launch. You can quickly see how you hit economies of scale, and that's going to kind of drive the business here in the short term. The other thing that is the other income generator right now is space systems. A lot of times customers aren't just asking Rocket Lab to launch their own satellite, at the very final end of it. They're saying, hey, can you build the satellite for us as well? Can you manufacture it? Can you do all the components, all the things that are required for communications and power and all these kinds of things? Rocket Lab does a lot of that stuff too. And when you're starting to see these big contracts, you start seeing some terms like Golden Dome thrown around out there. The Defense Department certainly has an interest in being in outer space and keeping an eye on what other countries are doing out there as well. So Rocket Lab's gotten some really big deals from the Space Defense Agency, from the Department of Defense, potentially from Golden Dome and other programs and initiatives coming up there. But it's not just, we're doing some fun stuff in outer space. There's some big deals because there's some national security concerns that are going on in the world right now.
And if the stock's trading for $55 or 50, I should say, that's generally consensus, and your price target is at 27. Where do you think you are below market expectations? Do you think you've got less built into these new Neutron, its ramp, or where is your model differing from where the market's pricing the company right now?
Yeah, and to be clear, I followed it for about 4 years, right? So this is now my 9th iteration of the DCF. I'm not just spitting in the wind and seeing, which way it flies, so to speak. But I think that a lot of the other price targets, and by the way, we've seen Citigroup issue a price target. We saw Bank of America and Goldman issue price targets. This is the first wave of institutional coverage we've even seen for Rocket Lab. There was no coverage at all before because it was a high growth company. It was difficult to model. We're starting to see the herd kind of congregating around $45 to $50 a share on the assumption that Neutron is going to ramp up to 20 launches per year very quickly. That it's going to be incredibly successful. I've seen several forecasts are expecting 20 launches of Neutron by the year 2028. Possible? That's certainly possible, Eric. I would applaud Rocket Lab if they can scale that up that quickly. But from what I know about Peter Beck and Adam Spice, who are the CEO and the CFO of this company, they're going to want to take this cadence slow. You don't want to go rush out there and launch as quickly as you can to appease Wall Street, and then you have a rocket blow up, right? You've got to make sure everything works perfectly and you build your credibility and that you can bank on that. You're going to have more customers lining up for future bookings. And so I'm thinking the launch cadence for Neutron looks more like one launch this year, three in 2026, five in 2027, and then we're going to kind of gradually scale it up to the mid-teens from there. I think that, in my opinion, my expectation of that is more conservative than others. But I also like to be on the more conservative side of price targets and then let the company prove me wrong and exceed those expectations. So we look really smart buying at 27 versus taking too big of a swing at a higher price target.
No, I hear you. So let's talk maybe about the broader space industry beyond just Rocket Lab. So SpaceX is the 800-pound gorilla in the space. Obviously, it's a private company. What are some other kind of investment opportunities in space, and what do you think about those companies generally?
There's a couple that we can actually publicly invest in right now, right? AST Space Mobile is an interesting one. That is ASTS is a ticker for that one. Then Planet Labs is another one. PL is another one that you can now publicly invest in. Eric, do you remember the SPAC summer of
Oh,
2021? Do you
how
remember
could you
this?
forget? How could you forget? Yeah.
Right. It was everybody. You didn't even have to have really a business. You just wanted to go out there and raise money, and there would be money that would be provided for you because you'd show a hockey stick that was going to grow 100x in 3 years with no financials to back it up. For better or for worse, a lot of companies raised a lot of money and then underperformed what they were promising in the SPAC summer of 2021. Um, Companies that kind of were associated with this period of time, if you remember Virgin Galactic
Oh, yes.
and Virgin Orbit, Astra Labs, was another one. There were kind of a lot of companies who were raising 500, $700 million, and then just couldn't execute on it. And Rocket Lab, in my opinion, has been kind of the outlier of that group in that they did raise a lot of money. They pulled in $777 million in their SPAC IPO in August of 2021, but then they also, believe it or not, executed well enough to perform with the prospectus, right? They hit the numbers that they said they were going to hit. Amazingly, this hockey stick actually proved to be true. But I think that the broader space landscape of what's going on out there, you had a lot of companies that raised a lot of money, and now that we're in a very different period of time than we were in 2021, you have a lot of those teams that are looking to kind of consolidate with the right group and the right team. I think Peter Beck, who's been a rocket scientist since he was 6 years old, has shown his credibility and is going out there and challenging SpaceX and the dominant forces that be in this industry. They're making acquisitions right now. We saw a couple here just this year of smaller teams that are looking to be a part of a larger entity that they're really excited to wake up and go to work for. And so I think you're going to see more acquisitions. You're going to see more consolidation. This is a very capital intensive industry. It's very hard to even launch a rocket of any size into space, much less one that's carrying 10 tons of payload for you.
Yeah, and Simon, I'm going to put you on the spot here. I know SpaceX is private. You don't have access to all their financials. If it was public at kind of the staid valuations you've heard, would you want to own both of these companies as leaders, or is your preference Rocket Labs between the two?
Oh, no, absolutely. I would invest in both of them. SpaceX is a fantastic company. I don't remember the last private valuation round. Maybe $150 billion or so. Eric, tell me if that's wrong, or if it's
I'm
changed
looking up
since
right
then.
now.
I tend to remember it being about 10 times larger than Rocket Lab, around a $20 billion market cap. And you can just kind of see, how big of a delta is. Rocket Lab is number 2 player in this space. SpaceX is number 1, but you can kind of see a 10x. Did you pull it up? Is that correct?
You won't be able to see unless you're watching the video podcast of this, but my eyes just bulge out. SpaceX latest valuation is reported to be around $400 billion. So that does show the trajectory that can happen when you are succeeding in this industry. I will say that.
What's $250 billion amongst friends, right? Not 150, $400 billion now. Elon is very motivated. There's no doubt that he's using these internally, mostly for Starlink, for its own internal purposes of broadband internet. SpaceX is the 800-pound gorilla in the room, but they're not independent. In fact, not only commercial customers, but a lot of government agencies are kind of wondering if they really want to work with Elon anymore, as he's going out there and having a public feud with Donald Trump and threatening to decommission the Falcon spacecraft, which has made them so much credibility and money over the years. Not saying that you're just going to, on a whim, abandon contracts that are already in place in there, but it's certainly nice to have a secondary supplier as you've got some really big contracts that need credible launch partners.
Yeah, and for some context for listeners out there, OpenAI, which is the breakout star of the AI era, they're reportedly valued at around 500 billion in their latest round. So that shows the potential of space, that SpaceX would be near that level as another private company. Simon, I really enjoyed this space conversation. As we noted, it's an area that we haven't talked about, but you've done a good job kind of elucidating a lot of the opportunities there. I do want to shift over to some more familiar space for people who are listening to this podcast. The last time we had you on the show, you had talked about some chip opportunities. You had talked about a pre-IPO company in Cerberus and your kind of opinions of them, that it's a stock that you'd be very interested in. They haven't gone public yet to date. But another stock that you really liked at the time was ASML. It's a stock we've talked about a lot on this podcast. My opinions have generally been it's a stock that I like in the long run, but a lot of the short-term factors have caused me not to add it to the portfolio that we keep on this podcast. But I do like talking to other smart people and getting their opinions on it. So would ASML be something that you're still looking to buy today? Has anything else come up on your radar that, maybe are topics that we haven't covered on the show? I just wanted to get your take on, what you're looking at in the chip space today.
Yeah, this is definitely a two-beer conversation here, Eric. We are in the early morning, so I'll make it a two-coffee conversation. But the point is, this is something you and I can talk about for a very long time. And by the way, your podcast is fantastic. I've listened to several of your episodes, even in preparation for this call, of you and Austin. I've got some fantastic coverage. I recommend everybody to subscribe to this because you guys are best in class when it comes to following, certainly computing and AI. I was very, very impressed. In terms of ASML, I mean, my goodness, let's pair that with a conversation about just chip making in general. With I know you guys have talked a lot about Taiwan Semiconductor as well, and there is no doubt in my mind that the computing demand of the world is going to continue to increase. OpenAI is talking about budgets in the trillions of dollars, not even hundreds of billions anymore, trillions of dollars to build out data centers in the United States, in the Middle East, and elsewhere. And who's going to be running? Who's going to be doing the horsepower? Who's all the chips going to be, doing the things that are necessary for all this high performance computing? It's certainly going to be manufactured by mostly three companies, two of which are in a lot of problems right now.
Yes.
The one that is not is Taiwan Semiconductor, which is by far the largest manufacturer of chips in the entire world. They also happen to be based in Taiwan, as the name would suggest, which China, if you've been paying attention, has got a mandate of reunifying with Taiwan by the year 2029. So there's a giant geopolitical risk associated with this, Eric, that what happens if the boats start showing up on the coast of Taiwan? Is it true, as I've heard alluded to, that Taiwan someone actually has a button you can push to blow up all the factories if it just really gets that bad? I'm not saying that is going to happen, but just talk about a long tail geopolitical risk. That's about as big as it could possibly be. The other two that are certainly having issues are Samsung and Intel. Samsung has a long history of underperforming and bad execution. Not only does the leader of their computing group spent a year and a half in prison due to bribery and corruption charges, but also, if we remember last year with South Korea, their president, indicated that they needed to have martial law, and then all of a sudden he got removed from office. This is just kind of a challenge of being a South Korean company. Nonetheless, having your leader stuck in jail behind prison bars when you're trying to run a company is very difficult. And then for those who remember the deal, really a big deal last year when Qualcomm pulled the Snapdragon contract away from Samsung, gave it to Taiwan Semi. Snapdragon is a chip that goes into basically every cell phone that's 5G compatible in the entire world. To lose big customers because you can't keep up with the smallest, 2 nanometer nodes and process technology is kind of a sign that Samsung is falling behind Taiwan Semi, in my opinion. And then Intel, Eric, I mean, where do we even begin with Intel, right? If Pat Gelsinger cannot fix Intel, coming back from a guy that worked with Gordon Moore in the earliest stages of Intel in its prime in the Silicon Valley heyday, to now Intel kind of not knowing what its future is supposed to look like. Is it going to go all in on foundries? Does it want to have the foundries division at all anymore? Is the government going to take a stake in Intel? Way too many question marks that if Pat Gelsinger couldn't figure out how to fix Intel, I don't know who can anymore. But these are the kinds of questions that face the computing world, is that, you've got to manufacture all these chips. There are political discussions and geopolitical risks that face all of these companies because of national security interests. And then also, you're trying to run a business at the end of the day. How can you actually stay ahead of your competitors in terms of having the right IP to manufacture at the smallest nodes, which are necessary to make the most cutting edge chips? A lot to unpack there, but that's kind of the semiconductor chip industry in a nutshell.
So, am I reading between the lines here saying one of my biggest fears with ASML has been the customer concentration towards TSM and the amount of leverage that that gives them, and that doesn't put the semiconductor equipment space or the people that make the machines to make the chips in a very good position. Is that your current read on that situation, or do you have a different read?
So ASML has got a technology that no one else can do, which is extreme ultraviolet lithography. EUV is what we call it, which is necessary if you wanted to make any transistor of less than 7 nanometers in diameter, right? This is the cutting edge chips. These are the things that go into iPhones, that go into data centers. It doesn't need to be this sexy for a chip that goes into a washing machine or a refrigerator. But if you're Apple, you are demanding the smallest transistors possible to create the best computing density of any chip that you can create out there. And so there are only, Taiwan, we've gone from 7 nanometers down to 2 nanometers and smaller. The newest nodes that Taiwan Semi is actually able to manufacture are 2 nanometers. They're pushing the limits of what physics was predicting was even possible before. And so that's a step change because you can't even use the regular EUV technology that ASML had anymore. You've got to take another step and use something called high NA EUV, high numerical aperture, which is the newest and greatest machines that ASML that produces. This is now a machine that each one of them costs $370 million. There's only a handful of companies that can even afford to buy those, like the companies we just mentioned out there. But it's cutting edge, and it's going to be another step change. And it's going to require a fundamental change in the architecture of the process technologies of the companies that are manufacturing those chips. This is my long-winded way of saying that we are in that one of those step changes right now, Eric. We're going from FinFET architecture to gate-all-around architecture for both Samsung and for Taiwan Semi, which are the only two that can manufacture at this point less than 2 nanometer cutting-edge chips. And so, accordingly, ASML is going to be the machine you have to use if you want to have the best chips that are available out there. I think that in the short term, there's going to be a lot of hiccups. Intel was not able to raise the funding it wanted to from the CHIPS Act in the United States, nor from a similar program that was in Germany to develop its fabs. Samsung similarly ran into a lot of problems for the Taylor, Texas fab that it was trying to develop out there. But again, a good fab costs $40 billion or more. This is kind of a challenging environment because we're kind of at the bottom of the cyclical cycle for semiconductors. But I think that long term, you're not displacing ASML no matter how badly you want to if you're a competitor in lithography. They are the cutting edge, most technologically advanced lithography provider in the entire industry. And that's going to be very important over the next decade and even longer.
Yeah, it is truly magical technology, which is part of why when a company like Samsung falls behind, it's so hard to catch up because we are truly at the limits of what is possible and the innovation to continue moving that next node. It is magical. I'll say that. So Simon, I did want to talk about AI. It is the AI Investor Podcast. So we were talking before the show, and I had asked which stocks you were interested in, and you said one to me, SoundHound. I don't think we've ever talked about on the show today. I believe it's ticker symbol SOUN, and I think it's a really interesting play, and you've got some ideas on it. So let's talk about SoundHound. What about the company is it that caught your attention, and do you find it attractive at today's prices?
Yes, it is very interesting to me. And I think the reason is, Eric, have you heard it mentioned that we might be in an AI bubble?
Few times.
It seems like everyone and their dog and their grandma is starting an AI company right now and promising the moon. It feels like the SPAC summer of 2021 all over again. We have to come up with some kind of clever moniker for the AI phase that we're going into. But SoundHound is not one of those companies that's just a fly-by-night kind of company that's cashing in on this, right? The CEO and founder of the company, Kayvon Mahajer, was at the University of Toronto at the same time that Geoffrey Hinton was there.
Mm.
And for those who know the history of AI, as I'm sure that you and Austin do, this was kind of the birth of modern AI, and the models. It all came from the University of Toronto and ImageNet, and the way that AI was being used in very different ways, using GPUs as a workhorse that was even doing this. And so he goes out and he founds SoundHound 20 years ago. This isn't a company that's just been around for 3 or 5 or 10 years. It's been around for 2 decades. And it kind of got its early start in actually listening to songs that were being played on the radio in your car and recognizing what it was.
Okay.
You might be listening to something on the radio and be like, oh, wow, you go back in time 20 years. You're listening to something, you're like, oh, I really like that song. I wonder what it was. You could pull up an app on the first iterations of the iPhone, and it would tell you. The name of their software. It could tell you. Midomi, I think, was the name of the app at the time. But it was conversation. It was always kind of like this dialogue where it could now understand things that people were asking. And we're not talking, even on this podcast, you and I are not having a dialogue in the same way that we would be typing if we were in a text message or if we were, typing to a GPT prompt. The conversational dialogue is more natural, and you've now got 20 years of training these models that are proprietary, by the way, that SoundHound has got. And it comes right back from a guy who really understands the nuances of this industry and how to build and train these models. And so it's kind of interesting to see that expand. You can now actually talk to your car. You can ask about, how it's performing. Does it need to have, is it time for an oil change? Is there any part that, digitally is showing that there's an issue out there? These are kind of already embedded into things like Hyundais, into Mercedes and Honda. It's kind of always been the auto side of it. And then NVIDIA invested in them in 2017 and said, hey, this is really a cool company. Obviously, they're going to be powering a lot of this on the edge because you're driving out there. This is not the same as cloud computing. This is edge computing. But you still want to have GPUs, NVIDIA's GPUs specifically, to be doing all the powering for the models themselves. So they raised some money with NVIDIA. They've been a great, fantastic partner in the near term here. And now, since it kind of naturally was built upon these simple things like recognizing songs or talking to cars and kind of goofy things, now guess what they're doing? They're doing agentic AI for customer service, where you can go to a Chipotle and you don't even have to talk to a person. You just say, hey, I really want a burrito bowl. I want it to have steak and whatever toppings, and then automatically it just puts in your order. There's nothing required for that. Fixing issues with your cable bill, setting up health insurance plans. This is the stuff that like Amazon wanted Alexa to be 10 years ago and just couldn't really figure it out, right? It's just like, they tried and they made some great progress, but they didn't have the performance like SoundHound did. And the last thing that I wanted to say before we kind of step back and talk about it a little bit, because I want to hear your thoughts on this one too, Eric, but revenue in the second quarter was up 217% year over year. They tripled their quarterly revenue. And it seems like there's no signs of slowing down. They issued a very, very strong forecast for the rest of the year here as well. Wall Street can't keep up with SoundHound. This is their time in the sun for a company that's actually been around and doing this for the last 2 decades.
Well, it's all very interesting. It's interesting that you talked about Rocket Lab earlier and the fact that it is a great company, but often great companies can get to valuations that can be ahead of maybe where a fundamental value is. My history with SoundHound was when I looked at them last year, they went on a fairly historic run. I believe I'm looking at the chart. In November of last year, they went from about $5 a share to in December trading for $24. So at that point, I hadn't done more research on it because I thought it was a stock that was running ahead of its potential. But we do have the stock now trading at a more moderate level of around $12 a share. It's a $5 billion company. And as you noted, there's a lot of proof points for SoundHound that you could say, is this a company with truly novel technology, or is it something that's a feature that's just going to get added from much larger companies? And you bring up that revenue number, and that's validation for it. You bring up a lot of the customers. You bring up the fact that NVIDIA was an early investor. So I do think it's very interesting. It's just one that I think we would need to do further research on, but I always appreciate the ideas on it. So would you be a buyer of SoundHound today, or are you just more, it's a very attractive company to you?
Yeah, and to use the same analogy of SpaceX being the 800-pound gorilla in the room to Rocket Lab, SoundHound is up against an 8,000-pound gorilla in the AI room called OpenAI, right? And people are just going to say, why would you even work with SoundHound? You can just work with OpenAI. And, maybe SoundHound doesn't need to be OpenAI. I think it's perfectly fine for them to be the market leader. But you look at the execution, and is there a niche where the automakers want to work with this company and the retail companies that want to get more transactions and more people through the line more quickly? And can you trust this management team that has shown every reason to trust them because they've been doing it for 20 years? I think so. And we're not talking about a $500 billion valuation like OpenAI is. We're talking about a $5 billion valuation, which is right around the same price that it came public in 2022 at $10 a share with the SPAC in April 2022. There's been dilution. We got to keep an eye on that, just like any of these early companies. There's risks. We got to keep an eye on that, but it's certainly in terms of a smaller cap flyer that is not like an ASML. It's not like a Taiwan Semiconductor. But if we wanted to have a sexier stock that's a small cap, it's a very small valuation, I think SoundHound is definitely worth one keeping an eye on.
I like it a lot. In our latest episode, we had recommended a couple very small caps, and it's nice sometimes in the AI space because there's so much noise about NVIDIA, and now Broadcom is over $1 trillion companies, and those are stocks that we own. They've been great performers, but going down and finding these small caps, that's often where a lot of the opportunity can be. And while there's more risk, part of the reason we have a portfolio is so that you can diversify across that risk. So if you're buying smaller positions in these companies, if a few of them don't perform well, but one of them has significantly high upside, you're going to win on the margin. So I like the profile of SoundHound. Simon, I don't know if we didn't cover anything that you'd like to talk about today. We went over space, we went over chips, we went over SoundHound. Is there any burning issues on your mind that you're like, Eric, you didn't talk about this today? I really just want to talk about this. Or do you think that's a good place to kind of wrap this up?
Yeah, it's really interesting, the disconnect between, my company with 7 Investing, we make recommendations every month, right? So I'm always looking for where is the best opportunity to invest today. And a lot of people have rightfully been pointing out the S&P is pretty spicy, right? We are actually, in terms of the cyclically adjusted PE ratio, which normalizes the earnings of the 500 largest market caps in the United States over the last 10 years, this is the second highest it's ever been in terms of the multiple of earnings we are willing to pay based on trailing 10 years, the normalized number. The only time it was ever higher was in 2000, right, in the dot-com, and people are kind of shuddering and saying, oh my goodness. But again, look at what, and I would counteract that by saying, what is the S&P today versus what was in the past? You've got NVIDIA and the Magnificent Seven that are now 33% of the entire index. And a lot of them, I probably would not invest in large cap American tech companies at this point, just because the expectations are already baked in. But I do think, Eric, that if you do a little bit more diligent homework, especially like the companies like you profiled on the show earlier, I love some of those recommendations that you made. I know you guys have a portfolio for the AI podcast that you have. For some of the companies that I'm finding, not across the board is everything expensive right now. I think now is a really good time to roll up your sleeves and be an individual investor that does their homework and finds, the mispriced opportunities. I see plenty of them in the market right now. It's not like the entire market is too expensive. You just got to do a little bit more hunting and not just go out there and buy the S&P index.
And let's give people a next step. You had published your DCF. What do they need to search for online to find that and go through some of the numbers and into more detail of what we've talked about today?
Yep. So our website is 7investing.com. There is the free article on Rocket Lab. That's one that I like to publicly put out there. If you want to see the DCF and the valuation, how I came up with that $27 price target and all of the assumptions, it's basically a sell side Wall Street report that's just out there for your research if you wanted to use it as a resource for you. And then also, if you do want to take the next step and say, hey, what are Simon's 5 best buys right now? Why is he so interested in digital advertising? What is that plastic shoe company that he thinks is completely undervalued? It's across the entire gamut of all industries, not just AI, not just space economy, but just the market as a whole, picking stocks that we think are the best opportunities for individual investors. So 7investing.com, come check us out. Free week for you to try out everything that we've got to offer.
Sounds good, Simon. I think I might know what the plastic shoe company is there. For everyone listening in, that will conclude this interview. But I will say we will have a new episode early next week, so be on the lookout for that. We've got a little bit of a different schedule with Labor Day. We're going to have a full review celebrating 1 year of the AI Investor Podcast, just as we've celebrated today our first repeat guest. So you'll always have that crown, Simon. I really appreciate it. I appreciate getting to cover some new territory that we haven't on the show before. So before we go, I just want to say thank you for coming on.
This is a fantastic podcast. I had a great time. Thanks very much for having me again, Eric.
Great. And to everyone out there, like I said, be on the lookout for that year review. It should be dropping early next week. Until then, we will see you later.
The AI Investor Podcast is for educational purposes only and should not be considered investment advice.